Bob, welcome back. It's great to see you again. You say the key unknown right now is whether central banks are going to be able to tighten sufficiently to slow down inflation without triggering a recession. I think, as I read my notes of what you said, is that you think they probably will be able to do that you think there are probably some signs that comparatively inflation will slow, and that the underlying economy, at least in the U.S., is strong enough to avoid a recession, even with the rate hikes as forecast.
Avoid a recession, Tyler, for now. I'm with those who are saying second half of next year, most likely. Threading that needle, engineering the soft landing, we know is very difficult. But those are calling for a recession like tomorrow morning, I think, are missing how strong the consumer is, how strong the job market is, how strong corporate balance sheets and income statements are, and the long lag, to use Steve's phrase, and variable from monetary and fiscal policy. The ease from last year is still operating on the economy now. It'll take a while, in my view, for recession to show its ugly head.
Am I right or am I wrong that Powell is not alone among central bankers in holding on to a very easy money policy, perhaps longer than he should have?
Well said. There's a whole group to blame, I guess is the way to put it. Look, that word transitory lasted way too long. In our view and many other views, there were signs that inflation, core inflation, was getting perky, and they just didn't seem to want to pay attention. So you have a long lag, the policy mistake, I'll call it that, and the need to restore credibility, as your poll just showed, is going to take a bunch of time, Tyler.
Yeah, I'm sort of with you on that, Bob. I mean, there are a lot of central bankers who could be sort of plead guilty to the same thing that Powell is being accused of here. And, oh, by the way, there weren't a ton, I don't know whether you were among them or not, there weren't a ton of market analysts who were all that concerned about inflation a year or 18 months ago. I want to go back to 2018, the fall there, because I think that's when, I believe it was 2018, it could have been 2019, when Powell started to raise interest rates. And he came under pretty sharp criticism for doing that, most notably by President Trump. And then by December, he had pivoted and he had gone back the other way and let rates come down. In retrospect, was he bullied into lowering rates at that point? And would he and we be better off if he had stuck to his guns back 3-4 years ago?
Yeah, how and why he did it, whether he was bullied, who knows? But the fact that he did, he went too far and it lasted too long. Perhaps we shouldn't have gone to zero. Look, hard to blame the pandemic and the reactions to it on anybody. We didn't have a playbook for that. I think the problem was waiting too long. As the economy began to normalize in the back part of 2020 and into 2021, that's when the Fed should have said, let's just get rates back to normal. No, we don't have to be punitive. Let's just get back off this zero target. And of course, at 1% Fed funds, which will still be under after tomorrow's meeting, and 3% 10-year Treasury, we still have negative real yield. So this is still stimulative for activity. We're not even in restrictive territory yet.
Yeah.